Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in with a delayed USMJ video. Reminder that we do not have trading in the US on Monday for Memorial Day, but Canada will still be trading, so the names on the CSE that have more volume than the names on the OTC, it'll certainly be important to continue charting those names, especially on Tuesday, Wednesday as we move on through the week, because they will have more data for us to be going off of, and tomorrow will be meaningful for most names, especially the ones that do see more volume on the Canadian exchanges. So checking in on things, we got GWPH, which is still pretty healthy overall. We did form a weekly higher low, and the base that the bulls are trying to defend is down at 171.71. And we can see on the daily time frame, we came back, we hit that level. It's essentially a double bottom, and then the bulls broke the lower highs on the daily time frame. So that's the line in the sand that bulls want to maintain in order to be their strongest. And we're still looking at that all-time high. We've got 188.76 and 196 as the two main levels of resistance to be watching. And the bulls are hoping that they can keep 171.71 as support going forward, which would keep them their strongest. And we just closed at the highest close ever on the weekly time frame. So still keeping control for the bulls, especially in the face of all the weakness in the S&P 500 the last month and the trade war stuff. The fact that GWPH is holding on so well is a good sign, because we can anticipate that if names are holding on strong, where they see correlations with the S&P 500, when the S&P 500 bulls show back up, they're positioned very well to see that correlation favor, or should see the correlation pick back up in favor of the bulls. IIPR, so upper wicks forming here, would not be surprised to form a daily lower high. We have a top of 91.27 and the low of 83.51. That's the most important range with what we're looking for in the short term moving forward. And we're looking for a lower high compared to 91.27. And if we see a break of the low of 87.01, if we break that on Tuesday when we resume trading, we're going to look at this to be our lower high of 89.19. And then we'll look for a higher low of 83.51 to continue a tightening daily equilibrium. Coming off of a bullish weekly chart overall, I'm watching the exponential moving averages, and the bulls are just continually, steadily setting these higher lows. And last week was the highest close ever on the weekly time frame, and still holding on just fine with where we stand right now. And again, same thing as GWPH, another name holding up really well. And when the S&P 500 bulls show back up, positioned well for that benefit. Curaleaf finally got a bounce. So anticipated that we would see the names that are getting beat up on the US side of things bounce on the same day, keeping in mind that this bounce is only cooling off short-term RSI levels, and Curaleaf didn't even break the pattern of a lower high every day. We did have one day in here where we broke resistance by 2 pennies, but aside from that, we've essentially set a daily lower high every single day now for 12 days in a row. So that's an important pattern to break, and even when we break it, we're still just looking for a daily lower high here, considering where we came from. So you look at the hourly RSI, and the hourly RSI definitely had the bulls comfortable looking for an oversold bounce. But again, we went from 15 hourly RSI all the way up to 50, and just like that, that hourly RSI is no longer a reason to be looking at a bullish entry. So again, as I talk about in the past, when I'm looking for my oversold bounce plays, if hourly RSI is one of the reasons I'm entering the trade, and then we see a short-term bounce, that's why I'm scaling out some into strength, because the hourly RSI is no longer oversold, which is one of the reasons that I was in the trade. If the bulls are going to turn this around, they have to form a higher low, and I'm looking at a potential little inverse head and shoulders pattern with a resistance of 1275. Here's the head. We have a lower high now at 1248, and here's the bulls attempting a higher low on the hourly, and we're going to have to break 1248 and 1275 to really shift this momentum and get the daily bounce going. And if that does not happen, then we're going to be headed right back down to the low of 1169. Bulls still have a lot of proving to do on these names, keeping in mind that we do have a ton of earnings approaching this coming week. So here are those earnings. Pause your video here if you want to write that down, but certainly going to be very eventful this week for the USMJ sector, and keep in mind that we are going to see names correlate with these reactions. So say a name has an earnings on the 29th or 30th, it's going to likely react to CWeb and acreage because that's the first little insight as to what to be expecting for the rest of the names. So we have to be watching what everybody is doing as far as reactions go. And this is the kind of scenario where you want to have this in front of you on a piece of paper, and you can write down bull or bear as each one reports and see a general glimpse or snapshot of the sector as a whole. If we have 75% of the names reacting bearish or 75% of the names reacting bullish, we want to know that. Even if we're only looking at one individual name, then we want to know what the sector as a whole is doing, so it's important to track that. Looking at CWeb on the daily time frame, again, the bear flag is clearly standing out at this point. 1952 is support that has broken. There is a lack of support here. The weekly time frame still has not established support. Every single week since the all-time high has been a lower high now 7 weeks in a row. So we are still in a weekly uptrend, believe it or not, which is hard to believe, but the most important support for me is 1751. If we hold 1751, we're going to be watching for the head and shoulders pattern on the weekly time frame after a short-term bounce. But again, earnings are going to dictate the short-term action and whether or not we're heading down to this support level or whether we do get a bounce going before that level is broken. TRUL, daily time frame, does have a good chance of changing this trend, but the bulls want to form this higher low, the sooner the better. Anything above 1455 is a higher low, and then we will have to see a break of 1733 to confirm this trend change, which would be notable because we have not changed this trend in favor of the bulls since that recent high of 2165. So have to form that higher low, the sooner the better. I would say if we break $16, the odds of an equilibrium increase significantly, whereas right now the odds of continuation still have some potential favor, even though we did see profit taking and selling pressure on Friday with that upper wick. IAN. So I still have not initiated a position on IAN. Well, I have not added to my position on IAN. OGI took my attention at the end of the week, and like I said, I've been traveling, so not really actively trading at this point, but what these upper wicks tell me is that the RSI on the hourly time frame is cooling off. So this trade on Friday, bulls showed up, hourly RSI went from 30 up into the low 40s, and just like that, it's creating further downside potential. So I am remaining very patient as I am looking to add here, and then I have to make the decision. Do I want to hold through earnings? Am I going to take that gamble because it is a complete gamble as to whether it's a bullish or bearish reaction to earnings, or am I going to sell any kind of bounce attempt before earnings take place? And at this point, I will probably just scale back what I was initially intending, and I do believe I will certainly hold my long position through earnings. It's just whether I add to that or not. And honestly, I take it one day at a time, so I can't say at this point whether I will or not. If we see a bull break of 550 on Monday or Tuesday, breaking the hourly downtrend for the first time in a while, because these bounces have been cooling off RSI but not confirming any trend changes. If we hold 529 for a higher low and break 550, it will be an hourly trend change. So that's what we're going to be watching on Monday, keeping in mind that IAN trades on Monday, and there is certainly some notable volume to be watching comparative to the US side of things. CL is dropping down very significantly and very quickly. So 1477 was the key support that has broken. 1416 is a support level still intact, but it certainly looks like a head and shoulders pattern right now. And looking at it on the weekly time frame, we have now, let's see, actually it is 1416, so we have not yet lost the higher low pattern on the weekly chart, but the odds are increasing a bit that that will happen. So that is the most important level. Anything on the daily time frame under 1599 is just a lower high at this point, and it's all about 1416 this coming week. OH is bound to CL to a certain degree because we do have the merger, the buyout deal that we're waiting on following through, or I should say completing. But 1077 is that low, and that broke without a ton of follow through at this point. But the fact that OH is breaking this April low, the mid-April low, we can go to CL and say, all right, well, there's our mid-April low, and if OH is going to break, the odds that CL is going to break are going to be increased a little bit. So for OH now, if we zoom out to the weekly time frame, we have clearly started to break this higher low pattern, and that may mean monthly consolidation is now underway, and anything on the monthly time frame above $5 is a higher low. So we're going to be looking for a healthy higher low on the longer term time frame to keep that uptrend intact. But it may be a slow summer for these USMJ names as we look for monthly higher lows to form and we fall through some of these key supports. So for OH, anything on the daily time frame under 1159 is just a lower high. GTII looks like a potential bear flag on the daily time frame. Again, this is cooling off RSI levels, and if I am playing an oversold bounce, the absolute last thing I want to see is a bear flag, because that tells me it really limits my capabilities. If I'm looking for a bounce and we get a bit of a V-shaped bounce, I then have a lot more wiggle room with what I can do. I can sell half of my position in profit, drop my stop loss level down. But if we're seeing a bear flag, oftentimes, if you have scaled in too early, that bear flag does not allow for you to get back to break even. And there are situations, specifically in cryptocurrency, where this has happened to me, but I will sell a partial position or all the position at a loss, knowing that if we do see the bear flag confirmed, I can just reload cheaper. So taking a small loss and freeing up that cash again for if we get another leg down, that is a difference maker as far as being underwater and losing control of the trade, as opposed to being in the driver's seat and being in control of the trade. So looking at key support, if we were to see a break on GTII of this low here, the hourly higher low, 1565, if that breaks, the odds that it is a daily bear flag will increase. 1557 and 1565, two key short-term support levels on the hourly time frame. MedMen still dropping down to all-time lows, although we didn't get a new all-time low on Friday. We just missed and we closed at the low of the day. So the bulls certainly aren't doing anything. I'll be interested, perhaps, if we change the daily trend, but anything on the daily under 335 is just a lower high, and from where we stand, that's about a 13% bounce, even just to get to resistance, let alone change the trend. So the daily trend change is not likely happening anytime soon. RSI levels can absolutely get overextended because we are in black dirt breakdown all-time lows, no support in sight aside from 290. KSHB, so this is one to be watching for a nice double bottom and tightening pattern. 457 is that low. We held that level by 3 pennies. And now the question is, can the bulls break 518? That is the range to be watching. If we form a lower high compared to 518 and we continue to tighten up, this is the kind of setup that I like, where we have clear, prolonged consolidation. And if we are going to see a bull move, I want to see a nice tight equilibrium into a bull break with follow through. And that I can believe. And it gives you a nice clear setup as far as levels to break and places to put your stop losses. But at this point, I would want to see, if I were not in the trade, like I'm not, I want to see a lower high compared to 518, a pullback for a higher low in the upper $4 range, and then a bull break, which would be convincing for a weekly bounce to then be underway, keeping in mind that anything on the weekly under 628 is just a lower high. So we wouldn't want to be watching for a trend change on the weekly time frame. We would just want to capitalize on the daily trend change, shift in momentum, lock in that profit, and then patiently wait to see if the bulls can put together a trend change on the longer term time frames. CBSI, solid day on Friday, big solid volume. So anything under 486 is just a lower high, but this is another one to be watching as well, because the bulls did defend support. And now the question is, you played defense, bulls. Can you now play offense and take out those resistance levels to prove to us that you are shifting that momentum? And we are still in a weekly uptrend. 433 is that level, and we held 444. So technically, it is still a weekly uptrend at this point. And just watching this right now, I suddenly have a lot more interest in CVSI. If we can change this daily trend, it will be notable. But I'm going to be keeping an eye on CVSI this coming week to see if we can get this daily trend change and that weekly higher low. Again, same story. At this point, we would just look for a weekly lower high to form and anticipate a weekly equilibrium is the most likely scenario. But with this double low now, can these bulls shift that momentum and look for a move into the mid $5 range in the coming weeks is something I'd be keeping an eye out for. And Bev on the daily time frame. So MBEV had the bull breakout, and now we're just trading sideways, establishing its new range in this new price discovery zone. Low volume, so no red flags there. Let's see what the tightening range looks like. Extended hour is definitely making things a bit extreme, but I can see 565 is clearly the resistance to be watching at this point. And as far as support goes, bulls want to hold 533, try and hold a higher low compared to that level. And we're just looking for a daily higher low to form. So daily higher low right now is trying to hold at 530. And the bulls want to change that hourly trend back in their favor to try and see daily continuation, because if we can break 565, that would be notable that we get continuation, because the bull move last week was just a bull move over 541 and the bull volume behind it. But as far as follow through, it's clear, it's easy to see a bull move when it's that tight breaking, but the question is, can you get follow through? Because traders jump in on that tight range breaking, but do they stick around is the question. Do the bulls stick around and look for another leg up? Still anticipating that the weekly time frame is going to likely form a lower high compared to 613 and stay in a tightening range. And it's not your picture perfect equilibrium, but it's a low, high, Higher low is 502, lower high is 613. We did form a higher low by 3 pennies here, and now we're looking for a lower high compared to 613 to stay in this tightening range into June, July. But if we were to see some big time bull volume and daily continuation, the odds that the weekly chart could break bullish would shift. So it depends on how we follow through. And there's a lot of times where we get a bull break, and how consolidation looks is very important. You get a lot of information as to what that consolidation looks like, as to whether we get continuation or whether that was a one-off bull move and now we have to consolidate for a significant amount of time. And the keys to look for are volume and the size of the pullback percentage-wise. ZYNE is still in that weekly consolidation at this point. It still hasn't really even started yet. We haven't formed a higher low since down in the $4 range. Every single week is a higher low as far as the candlesticks go for almost 10, 11 candlesticks in a row now. So if next week, if we break $13, that pattern breaks and we look for the weekly higher low to be set, and it is clearly consolidation mode. This is the most consolidation in the last 5 days that we have seen in a long time. So that's when you pump the brakes. If you are a bull, this is when you're aggressive, with the volume profile being everything the bulls want. We get an equilibrium with a bull break. We then have a bearish doji, and now we're in consolidation mode. So if I'm trying to trade as a bull as aggressively as I were back in April and May, I'm going to get back a lot of that profit by trying to fight the short-term trend. The daily trend has lost the uptrend. The weekly trend is certainly still in an uptrend, but trying to aggressively trade when the market cycle shifts, and this is just a mini market cycle that has shifted, is a great way to give back profit when we don't want to do that. PYX is another one to be watching this week, and this is the kind of scenario where we break support and get no follow-through. So we break support, it only lasts a day, and then the bulls show up in a big way. So that tells me to start looking in the other direction. And right now we have a clear resistance of 2370, and 1958 is a clear resistance as well. If this is our higher low of 1751, and then we see a bull break of 1958, that changes the daily trend. And that would be notable. And looking at this on a longer term perspective, you can see again, a lower low here, but clearly the bulls are building a base and starting to defend this support zone. And the question is, can we break 2370? Because if not, it's just a weekly lower high. But let's look at this one again on the monthly time frame, because like a lot of other individual names, we are looking for a monthly higher low to form with our high, low, lower high, and now we're scouting this higher low down here in the $16 range. Can we change the daily trend and give us more conviction and more confidence that our weekly higher low has been established? That's what we're watching this coming week. PLTH. Trend change, trying to follow through. Big bull move. Here's the consolidation, and now the continuation would be notable. 251 is the most important support, and bulls want to break $3 to change this daily trend, which would then have me zoom out to the weekly and say, all right, anything on the weekly under 360 is just a lower high. So I would anticipate that we're likely going to see a tightening weekly range with a lower high compared to 360. But first things first, can the bulls break $3, and what does the volume look like? Because if we can break $3 and we see, some significant bull volume days of 1.5 million, 1.2 million shares traded, that would increase the odds the weekly chart can just go right through 360. But if the volume is, in line with 600,000, 800,000, not very impressive, that's the kind of scenario where even if we get the bull break, we're still going to be watching for a lower high compared to 360. BAMM, tightening daily pattern, put it on the 2-day time frame to just get it smooth and looking for this higher low to form, but no indication that it has formed yet. Our lower high is 295, and now we're scouting a higher low compared to 155, and looking at the 1-day time frame, now that I have that scaffolding for the longer term, it looks like a little bear flag, no bull volume whatsoever. So I would potentially be looking to play off 155 support if we were to drop down to that level, but most likely on this name, I would just want to be sitting through and waiting for this 2-day time frame to tighten up, form a higher low, maybe try and play that higher low off 155 support, but otherwise, just knowing that it's going to be multiple weeks before this. If we do form a higher low and then a lower high, it would take 2-3 weeks to play out to break this tightening range for some more clarity. Tilt. Weak. That's it. 161 support. It broke by a penny. Or 2 pennies, not significant at this point, but again, we're approaching all-time lows, so the bulls are certainly not comfortable whatsoever in this position because all we've been doing is forming lower highs on the weekly time frame. I have no interest in tilt. I see a lot of people are in love with the story fundamentally, and again, it's just a recipe for disaster. Whether or not it is all truth, and it is the next darling in the USMJ space, The fact that you have people falling in love with it and we're about to hit all-time lows means there's probably a lot of people that are going to see some pain. You can like a company fundamentally and not have a position in it and be patiently waiting for the signs that you should be in it. And that would be an uptrend. We want to be playing with the trends, and that's the kind of scenario where if I see a name that I like, for IAN, I'm doing this because we have a monthly longer-term uptrend, but if we're looking at a name like this, you can love Tilt and everything about it fundamentally and still not be in a position. And if you showed me this chart and told me that, I'd say you're doing a smart thing. You're patiently waiting for the trends to dictate when you should get in. That's all I got. I'm going back to the beach. I like this back and forth beach. Disclosure, I have been doing buzzed analysis this whole weekend, but I think it's still worthy enough of content posting, and we'll see how Monday goes. I'll be back to normal on Monday evening, and we'll take it from there. I appreciate you watching. We'll end it here with some music from the streets of Asheville.